Retirees should be conservative in their investment strategy. Is this really true? Let's talk about de-risking as you near retirement. Welcome to another episode of Money Matters. There are investment strategies that cater to this generalization of retirement and low risk. There are lifestyle funds that automatically de-risk as an investor nears retirement age. In Hong Kong, we have the DIS, the default investment strategy of the MPF system. One of its features is that it automatically de-risks from age 50 as the investor prepares for retirement at age 65. Why is it said that retirees should be conservative with their investments? Many retirement plans were used to buy annuities as their investor neared retirement age, at least in the UK. An annuity is essentially an insurance plan that pays an income for life in exchange for the pension plan. Therefore, one of the major factors that determines how much you get as an income for the rest of your life is obviously the value of the pension plan. Therefore, it makes sense to protect the value of the plan by de-risking in the final years in the run-up towards the point of exchange. The marketing term for this is to lock in the accumulated profit. However, annuities are no longer the go-to solution for retirees to take a retirement income. In fact, many retirees are opting to remain invested in the market and choosing other ways to take an income during their retirement. This is because with annuities, you're giving up a large sum of money for the inflexibility of taking a fixed income for life. What if you need a lump sum? What if you want to pass some money down to your children or your grandchildren? You can't do this with an annuity. Annuities are great if retirees want a guaranteed income for life, and I would say that particularly good for those who don't have a larger amount to convert and value the guarantee over other factors. In Hong Kong, there are no restrictions how you take your MPF upon retirement, meaning you can take the whole lot as a lump sum. However, unless you have specific plans to spend the whole lot, perhaps to pay off your mortgages, it's more prudent to remain invested in the markets even if it's not with your current MPF provider. You can generate a passive income from the proceeds of your MPF plan rather than just holding it as cash in the bank. Therefore, your time horizon actually extends beyond your retirement age. With time being a key mitigator of volatility, an extended time horizon means that you can remain invested in assets that generate higher levels of growth rather than succumbing to this myth of de-risking as you approach retirement. The normal process of de-risking means moving into a greater allocation of lower risk assets such as bonds and cash, and moving away from stocks. Now, US stocks grew 841% versus US bonds at 241% average total return over 20 rolling year periods. Being overly conservative will increase the risk that you'll run out of money before your time is up. By understanding that your time horizon is longer than you think, you can remain invested in stocks as opposed to switching into bonds and cash and suffering lower returns when you need it the most. Retirement plans naturally make the biggest gains during their mature years, simply by virtue of being of greater value because of many more years of contributions. By de-risking at this later stage, you stand to significantly diminish the value of this retirement plan. In fact, given a saver and his employer each making contributions of $1,500 per month from age 25 to 65, and then using reasonable assumption of de-risking from age 50, the person stands to lose 12% of the value of his retirement plan, or around 1.2 million Hong Kong dollars. The cost of falling into this trap of de-risking could cost you a family holiday every year for the rest of your years, or cheat you from the purchase of a brand new premium car upon retirement. So, Retirees should be conservative? That myth has just been busted. Risk comes in many forms. Falling short of your retirement lifestyle needs is one of the biggest risks many investors face. So try to look ahead and try to make plans for your retirement so you don't fall short. Furthermore, if you're approaching retirement and would like to convert your MPF proceeds into a steady income for your retirement years, come and have a chat with JS Wealth and we'll set you on the right path to support your retirement lifestyle. Thank you for joining me on this episode. Ask me a question about your portfolio in the comments below. Let me know what sort of videos you would like to see in future episodes. Smash that like button, subscribe, and I'll see you in a future episode of Money Matters.